Welcome in, everyone. I am the Crypto Bull God, and this is on the charts. If you appreciate the content, make sure to hit the thumbs up button, drop me a comment, and click that bell icon for all notifications to know when I go live each and every single weekday. Welcome in, everyone. Welcome. Welcome to the month of September. It's so exciting right now. Can you just feel the excitement in the market right now? Engagement on social media has completely dried up. You can check out Google search trends for crypto and Bitcoin have certainly dried up. We're at that stage where, I think there's my read on the market personally. There are people who are in my camp who have and this is what we predominantly spent a lot of time on Saturday talking about. So we're not gonna spend time today talking about it, but who predominantly have this high time frame macro view and say 2025 is going to be very bullish. In fact, the fourth quarter of this year is going to be very bullish. And then you have a camp of individuals who have been calling for a triple top, right? That we're entering some massive bear market for crypto, which I, again, don't see, but you kind of have these two diverging views. So what I wanted to do today, and this is not to feed into the pessimism, you know that I always I always aim to keep things unbiased on this channel and objective. We are going to spend some time focusing on some concerning views on Bitcoin, and I want to talk about what we want to see within those charts, why they're concerning, and what we want to see moving forward to really begin to turn some of those views around. Because keep in mind, I had posted this out recently that I will say, for somebody reading the market, for as much time as I spend evaluating this market, there are certainly conflicting signs on different charts, okay? It hasn't, again, without revisiting the conversation that I had on Saturday, it hasn't invalidated any of the view that I have going into the fourth quarter and next year. However, there are some concerning things and some conflicting things that are bearish. And so that's what I wanted to spend a little bit of time discussing today. Rory, welcome in. Juan, welcome in. Good to see you guys here. Feel free to drop a comment if you've joined the live stream today. So again, anytime, it doesn't matter what chart we're evaluating, okay? Any chart, the absolute most basic thing that you want to watch for, okay? Very simple to do this. In order for you to begin to feel convinced that we may be seeing a trend reversal back to the upside, what do you think I'm about to say? What do you want to watch for on the chart? You want to watch for higher highs and higher lows, right? Let me condense price action here and just put this on a 3-day for the moment. There is absolutely no debating, okay? No debating. We had a high here. We had a lower high here. We had a lower high here. We had a lower high here, and we're in the midst of here printing another lower high. We have all these series of lower highs coming in. We have a low. We have a low. We have a lower 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 low. So we have all the basic building blocks of a bearish narrative, right? If someone were to say that they're bearish on the market, as much as I believe that they are not evaluating the whole picture, and again, some of that is contingent on what time frame you're looking at, it is totally justifiable for someone to evaluate this view and say, well, it's bearish from the context of printing lower highs and lower lows. You're not going to get a debate from me there because that's just an objective observation. So what you want to watch for, just very simply, we put in a low here. We put in a lower high here, okay? Now we're down in this formation. We can come all the way down to here. We can come down to 54, 53, 52, 51. And if we get a bounce, now first off, we've put in a higher low. So that's the first thing we want to watch for. We got the higher low. Now we need to take out this area here. This area here hit a high of, essentially we'd have to break $65,000 convincingly. So now we'd have to essentially come up to this area. I want to come up to this area above $68,000. Once we print, if we print the higher low, and I've hit on $68,000 a few times now, we print and stay above with confirmation $68,000, we can have some strong, we can have a high degree of confidence that we may be in the midst of a strong trend reversal. Of course, there are other signs we want to watch for on other charts, and we're going to get into some not so bullish views and have an honest conversation about what we want to see turn around and what's realistic for some of these charts. Monthly is not what I want to look. I actually want to start with the 3-day, okay? And you might be saying 3-day. Well, we actually have spent time evaluating this chart before. We haven't looked at it in a bit, I don't think. But, all out. But let's just focus on price data. Let's not take a look at any price indicators here. I have one moving average. Now you can see here, what I'm about to show you is historically, once you see candle body closes on a 3-day, close below the 50 simple moving average, which is the purple line, it has spelled disaster with price action more times than not. Now, anytime, no matter what time frame you're evaluating, whenever you're getting a candle body printing beneath a moving average, it's expressing weakness. You just have to ask yourself the question, what time frame are you looking at, and what moving average are you looking at? The faster period moving averages, your maybe a 5 simple moving average or a 10 simple moving average, that's going to capture the more recent price action, right? It's the average of the past 5 or 10 days. The 50 simple moving average is the average closing price for the past 50 days. So if you're looking at a 3-day chart and you're getting candle bodies closing below the 50-day simple moving average on a 3-day, you're saying price is weaker today than it has been on average for the past 150 days, okay? Because each candlestick is 3 days, 50 times 3, the moving average, 50 times 3 is 150. So that's certainly expressing a high degree of weakness. That's what this chart is saying. Now, you can see here, we have a clear breakdown in structure here. We're below the 50 simple moving average, which is not what we want to see. This was a little bit of a fake out, right? This was, again, right before my surgery, right before we had liftoff going into the fourth quarter of last year. But let's look at previous times when this 50 simple moving average was trending up, when we started to get candle body closes below it, what sort of price action we got. Of course, this brings back PTSD for many of you. This is the 2022 bear market. You can see once we got under here, significant downside. Here, we spent a considerable amount of time under here. This was back in 2021. Of course, this was part of a corrective structure that we've spent a lot of time talking about. We spent May of 21 to August of 21. Actually, that wasn't that much time, only a few months. Here, this spelled eventual disaster. There were also all sorts of signs in the repo market that something was going on, something was weird going on in the market before the beer virus hit the United States. And you can see we did get above it temporarily and then dipped right back below it. But we spent a considerable amount of time, under the 50 simple moving average. If we go back to the time when CBG first entered, put his first dollars into the cryptocurrency market, boy, have I learned so much along the way. You can see once we got underneath this 50 simple moving average, of course, we had a larger descending triangle here, but you can see it spelled disaster. If we go all the way back here to 2014, and I'll stop there just because I don't think it's as meaningful to go back further than this. You can see in 2014, once we dipped below here, again, we temporarily got above it, but it spelled disaster. So we've had some really big corrections when we've been under the 50 simple moving average. I would say the only true fake outs, this was a little bit of a fake out. I'm 50-50 on calling this a fake out only because this ended up being part of a corrective structure, okay? The only true fake out was in recent times back in 2023. thumbs up. Appreciate everyone tuning in today. I know it's not a very exciting market, but I'm doing my best to still educate you and keep you aware of everything going on. This was really the only true fake out. So you got to ask yourself the question. Now, this is why, and I think this is some of the value that I can add to your sort of portfolio of analysts that you look at. This is where I'm bringing the actuarial side of who I am from a career aspect to the charting field. You know, when I talk about topping indicators, right? When I talk about topping indicators, I'm not looking at one chart or one data point. Intuitively, for anyone who is a data person, that doesn't make any sense. You're implicitly implying 100% accuracy on that one view. I have 5 to 6 views here, right? And we're going to use those 5 to 6 views to tell us when the market is likely topping, right? When a few of those begin to fire, right? Because all of them are not going to fire. I would find it highly unlikely they're all going to fire, right? It's the same thing when we're looking at a 3-day. This 3-day alone is not telling us disaster, right? First off, because it's one data point, and secondly, because there's limited price data. I've hit on this point many, many times. Bitcoin only has price data on this chart going back to 2012, okay? So you have 12 years of price data here, which is not a lot. But it is one view that is concerning. It is one view we should be aware of. And so on this, I mean, it's very simple. On this chart, what you want to see is you want to see a push definitively above the 50 simple moving average, which is right around 64,000. And then again, you just have to start taking out these lower highs. Now let's talk about another view we have spent some time talking about and get caught up today. Of course, we had a weekly close come in. I have not looked at the weekly close on Bitcoin, so this would be my first time looking at it with you live. Let's get off the month. Was everyone able here to join me on Saturday? We were geeking out together for like 55 minutes on Saturday. I'll get to the comments in a moment here, but I hope you did. I do believe that Saturday's live stream was very important for you because the messaging was keep the bigger picture in mind and don't get weeded out in September. Just fair warning to all of those who tend to be more emotional. This is not the chart that I wanted. Can I pay someone to clean up my TradingView charts? I have too many damn charts here. Okay, I think this is the chart I wanted. So one of the things that we've spent some time talking about, we've been talking about this for a while now, one of the concerning things that I've shared with you on this chart is this negative, it was, it's technically not negative divergence because the price isn't moving higher as the RSI is going down. The concerning thing with this relative strength index is just the relative weakness. Now, there's a couple things that I've pointed out on this chart. First off, I have shared with you that once we've broken above the 70 level, that's this gray line right here, this horizontal gray line, once the relative strength index on the weekly has broken and cleared above 70, we see a ton of impulsive moves come into the market. And we saw that, right? We saw Bitcoin going sky high to 74,000. We saw meme coins going nuts. And we saw a lot of VC tokens do absolutely jack shit. Not naming any names, but, Casper. So the thing we wanted to watch out for and what would spell potential for some significant downside in price action was not if we broke back below 70. This was not concerning. Okay, this was not super concerning. Once we started to get down here, it was because 54. We took a look at this. Once you go back in time and you look at once Bitcoin spends time above 70, once it breaks 54, we're not going to have a good time. We're not going to have a good time, right? So this is one view that is definitely concerning to me. Now, the other thing that's concerning about this view is that I honestly don't see... let me try to articulate this as best as I can. Let me see, what can I look at here? Price is September of 23. Okay. Oh. We're just going to focus on the relative strength index. Stay with me because I have a very important point to make here. I know I'm jumping around a little. The other thing, real quick, before we get back to the RSI, the other thing we're watching for, obviously, is this stochastic RSI. This thing is flipping and flopping around. It's bipolar, doesn't know if it wants to stay at or above 20. Of course, we'll take a look at the 2-week as well. The 2-week, anytime you go to a higher time frame view and you see that bullish confirmation, it gives you more confidence because it's a higher time frame, more credible view of what's going on, that we really will see a bullish turnaround to the upside. So we'll take a look at the 2-week in a moment where that may print this week. But on the weekly, same thing with the 2-week, we need both of them to get above 20 because that will be the fuel, a strong part of the fuel that will lead to bullish price action continuation for the remainder of the year. So this is something we have to watch really closely to make sure it does indeed happen. Now, if we just focus on the relative strength index, okay? If we just focus on the relative strength index, again, there's a very important point I want to make here. This relative strength, I want to draw this line so that you can see this, okay? Look where we're at right now. This green line, see how we're at about 47? Price is where? $58,000, right? And the relative strength index is at 47. All the way back here, when, oh boy, yeah. When price was at $26,000, we were at the same relative strength index reading. Why am I bringing this up? Well, the reason that I'm bringing this up is because based on where price was in September of 23 at 26,000, and based at how low the relative strength index was, there was a very solid chance. We had a really solid chance that we could print a much higher level on the RSI and avoid any negative divergences. We actually technically, this relative strength index technically is lower than here. So this really technically didn't even evaluate that before the live stream, but it's actually a very good point. This is technically a negative divergence. Absolutely. So notice these two areas here and these two areas here. Once we printed the higher high up here, the relative strength index went higher. You'll see here, even though price went higher, 75 relative to 69, notice how, let me draw this as best as I can. Notice how, where are you at? Right here. See how we're going down? So this technically is negative divergence, okay? But the more important thing that I wanted to point out to you is the immediate price action. The RSI was all the way down at 47 when Bitcoin's price was at $26,000 a year ago. Now we're at the same relative strength index and we're only 28% away from reaching our all-time high. So why do I point that out? Because it's highly unlikely, okay? I find it to be highly unlikely that the relative strength index is going to come up here. I shouldn't say highly unlikely. I would say it's more unlikely. Say that. I'm a stickler for stats, given what I do as a day job. I find it more unlikely that Bitcoin's going to print a higher on the RSI as it's peaking out up here temporarily at that 85 to 92 zone, which I think is what's in the cards as early as the fourth quarter potentially. I think more than likely what you will see is a relative strength index maybe printing in the 80 range, and now you have a negative divergence going on. And that's something we need to pay particular attention to. So I do not like to see the weakness in the relative strength index. This is not working in our favor. Again, these are things that when you're taking an objective view of the market, even though I am monumentally bullish going into 2025, and the market has a tendency to do what the fewest expect, and I think a lot of people are going to be caught by surprise by some of the violent moves upwards in the market. I still believe that based on everything I shared with you Saturday. This should still give you pause for concern. We have to allow things to shake out, play out here, and just stay on top of things, because if we start printing negative divergences on the weekly RSI, that is something we will have to assess at that time and be very mindful of in making decisions on how we should be positioned in the market. Let me get into the 2 weekly and then I'll get into the comments. So the 2 week is another view. I think this candlestick, I don't think it printed this week. I think it prints this week. Yes. So this is another view that we should be very mindful of. Let's just focus on price action. I don't know why I, again, have the 9 EMA here, but I do. So the thing with this view, the thing that has me most concerned with this view, of course, there's a couple things we could look at here. First off, we had a cross down in the MACD that we've spent time talking about. That's never a good sign on a 2 week. If you look at the relative strength index, we've lost momentum here. Now, keep in mind, even though we've lost, you could actually say, you could actually say this is a head and shoulders pattern, which means we should see, well, we might have bottomed. But you can draw patterns on relative strength index just like you do on price data. Now, you could see a clear breakdown of momentum here. But I will say, even though that's a degree of weakness, one of the things I do like to see is we still have the higher low. Okay, we still have the higher low in the relative strength index, right? This is higher than this low down here. We were here at 47. We're right now at 54. The other thing it looks like we might be doing, let me see. The interesting thing on things like relative strength index, you can draw areas of price confluence, areas of confluence on the RSI, just like you would on the price data. Man, I need a good masseuse. Anybody know a good masseuse? I strained a muscle weeks ago, and this thing is slow as fuck to heal. Okay, anyway, there's a general area of price confluence right around 54, and it looks like we're holding that for now. So I really don't want to see us break down significantly from this level. What I would love to see happen this week, is for price to stabilize, and maybe we close up towards, where are we at right now? We are at $58,000, okay? I would love to see a close up towards 60 to 62. Right up in this area, 61, 62. That is asking a lot, given the seasonality pattern present for the month of September, but it certainly would be a decent win for us if you could push up to 61 to 62. It would help this RSI out. The other thing is, let me just tell you, this is the thing I wanted to focus on here. Remember, we want the positive crosses to come in on the stochastic RSI. Check this shit out. We got the nice bullish close. We were all excited here. Now, okay, we got to get above 20. We're at the third. And now we're curling back down again. Again, one of the key things I will be watching for to tell me it's boom time is we're going to see a cross up on the stochastic RSI above 20 on the 2 week and the weekly, both of them. We can have a high degree of confidence based on history at that point that we should start seeing some significant upside in the market. Guys, I'll tell you this again and again. There's a lot of points that I will continue to just reiterate because I want to etch it into your head. When this market moves, whether it's to the downside or upside. When it wants to fucking move, it moves. Position yourself accordingly. And if you're like me and you've gone in at low valuations, you can fucking sit here comfortably and not be sweating anything. If you were buying Bitcoin at 74,000, I don't know what to tell you. But if you were buying Bitcoin at 10,000, 20,000, 30,000, 40,000, you're sitting very pretty right now, okay? So just sit back and chill. These are warning signs. These are warning signs for sure. But keep in context everything that I've shared with you on Saturday. Let me get to the comments here. Track, welcome in. Chris is excited about shitcoin. Who wouldn't be? Welcome in, Todd. Good to see you. DT, always nice to see you. Hope you're having a nice black cup of coffee this morning. I'm doing fantastic, honestly. I mean, I'm just trying to keep things a little lively because I know this market is fucking dead right now. It's dead. There's no engagement. There is no engagement. I appreciate you guys showing up. Hopefully I'm adding some value to your life. Else I don't know why the hell you're here, but appreciate it. Matic, I did see they're changing their name. Yeah, I don't know what's up with that. I haven't been keeping up with that, but I did see that. What else? You know, something else I did want to do. I thought we'd take a quick look at traditional markets. I know there's a lot of eyes, and this is actually important, although I don't know. How do I want to say this? I think you can overcomplicate your life by evaluating too many different things, but I still like to keep on top of traditional markets just to have a sense of where the general indices are at. Well, if we look at NVIDIA is a huge driver of performance on the NASDAQ. We can see right now, we've gotten some significant downside action today, down almost 10%. But there's nothing super alarming going on with price. Wouldn't want to see a cross down on the MACD. We'll have to see how we close the week. If we can close the week right at that 10 simple moving average at 113, I think that would be a big win. But you can even see crosses down on the MACD aren't necessarily. This is why you have to consider how an indicator looks in relation to the other indicators. You have to consider the fact that there's no one indicator that's going to tell you anything with certainty. You have to take a look at where price action is in relation to moving averages. There are so many things you need to consider when you're evaluating a chart. But right now, we're just sort of stalling out here. If I were to give you my gut feel on what I would say this has quote unquote felt like, this felt like back here to me, very much. I remember having a conversation with my family at one point, my mom in particular, and they're all scared. They were all scared about the stock market and everything, and that was the sense back here in August. And again, what I would say, there's so many things I could say to that. One of the things I would say is, if you're allowing your emotions to dictate your investment decisions, you're going to make some horrible choices. The herd, in many cases, the herd is going this way and you should be going this way. And it should feel uncomfortable at times. But if you're doing your research, what you're going to find is quite often, more times than not, you're going to be going off this way with the fewer amount of people, and most people are going to be in this camp. That's just if that was not the case, most people would be extremely wealthy and successful in investing, which most are not. Did not see that today. NVIDIA got subpoenaed. I'll have to check that out. What did they get subpoenaed on? Let's see. NVIDIA. NVIDIA gets subpoena from the U.S. DOJ, Bloomberg News reports. Officials are concerned that the chip maker is making it harder to switch to other suppliers and penalizes buyers that do not exclusively use its AI chips. I'll have to read up on this. Very interesting. Be wary of reading too much into news headlines. Thank you for sharing that track, by the way. But be wary of taking too much into account with the news headlines. They often lead you astray. Again, it's what the herd are paying attention to. Not that you should not pay attention to it, but just be careful in terms of how you're considering taking that into account with your investment decisions. Again, Because if you predominantly relied on news narratives, you wouldn't even be in crypto. I mean, China's banning crypto, then they want crypto. And they're banning crypto, and then they want crypto. Gary Gensler is trying to list everything as a security. That fucktard will not go away. You know, I feel like the choice, we're not going to get political. I feel like the choice is very clear to me who to vote for U.S. president. But then it became crystal clear to me when Trump said on day one he would fire Gary Gensler. I think it became very clear to me who to vote who to vote for at that point. What has been? Ooh, this is a really good question. What has been your biggest win in terms of going against the masses? So my biggest win would be subjective. You could interpret that as financial. You could interpret that as the fewest amount of people believing in something you do and you end up being correct. Either way, the ones that hit me, and I'll tell you my biggest loss too. This was my biggest fuck up, and I've shared that with you guys. This fucked me up, and I've learned from it. My biggest wins, I told my former company to start investing in Bitcoin when it was at $15,000 and $16,000. But anyway, this was one of my biggest wins. Okay, buying in this area when everybody said Bitcoin was going to 5,000. We saw this beer virus crash. This was a very big win for me. Buying Chainlink at $1.50. I mean, this was $1.35. Yeah, that was a big win. And then also another, I would say the last one that comes to mind, going against the herd. I mean, guys, descending triangle. You know, descending triangle. And I remember I'll never forget Tom Lee going on Squawk Box and talking about Bitcoin being in this massive consolidating phase, and $5,800 to $6,200. You remember that these numbers stick out to you when you've spent so many times analyzing the charts. $58,000 to $62,000 was some big floor, and it wasn't going to be broken. I was like, no, this is a textbook descending triangle, and it worked out. I mean, we're down here at 32, and that was an opportune time to buy. So I would say those are my biggest wins against the masses. And again, all of this information that I'm sharing with you guys, when you take into account all of the commentary that I shared with you on Saturday night, and you also take into account all of the bearish price action that we talked about today, and things that concern me and things I want to see clear up in the chart. Again, I am still very much in the camp that we are going to see significant upside going into 2025 and in 2025. I, of course, could be wrong. But again, objectively evaluating the data, I do not think that I'm wrong. It feels, for me to come out and be this bold and make this statement to you amidst all of the unsuredness and all the fear in the market, I got to tell you, part of this feels uncomfortable. I understand I don't have a big viewership here, but still, I'm coming out live. I'm communicating to you guys. This is my view on the market, and this is why. And I know that I could be dead wrong just like any other time, or I could be dead right like many times. But the fact is, what leaves me feeling convicted in communicating these things to you is that I am objectively basing it on data. Again, I am a data-driven person. It's just the way God built me. I'm a numbers guy. That's who I am, right? So I feel as uncomfortable, because most people are not excited about this market right now. As uncomfortable as it is, you see the headlines, you see the clickbait fear porn, you see all these talks about massive recessions and depressions that have been going on literally since back here when we had bottomed, right? I mean, the same calls going on here, they were occurring here, and now they're occurring here again. I don't know if you're noticing a trend, but I sure as hell am. People were calling for the end of the world here. the end of the world here, and they're calling for the end of the world here. Now, these doomsdayers, okay, these people who take victory laps when Bitcoin is down, not naming names, Peter Schiff, eventually they will be correct, okay? Eventually they will be correct. But I don't think they're going to be quote-unquote correct until we're somewhere up here in 2025, and then we start, you'll probably be hearing calls for super cycles and Bitcoin going to $300,000 and all these crazy targets, and it's a great sign that you should be getting the fuck out of the market. But we know we're going to rely on those impulsive and cyclical top signals to tell us with conviction when we're topping. I will tell you, for as many concerning things as I've shared with you today and taking an honest assessment of the chart, I know how quickly this market can turn around in a positive direction, and I feel way too convicted on all of the research that I have done to land me to where I'm at today, feeling what could go into 2025. Could there be a black swan event that occurs, something unforeseen? Of course. Black swan events are, by their very nature, something that you can't predict. Could I be, again, dead wrong? Of course, but I don't think that I am. And we will find out. Like I told you guys, some of the best decisions, not all the time, but some of the best decisions you can make in life in general, but we're talking about investing, some of the best decisions you can make are the ones that feel the most uncomfortable. Again, if you're buying a falling knife like Casper, and you're not willing to objectively evaluate a chart, and you're trying to catch a falling knife, that's a dumb decision, in my opinion, okay? That is a dumb decision. But if you're objectively evaluating data, and you've formulated a hypothesis on that, and nothing has invalidated it, why would you shift your view? Yes, there are some bearish things turning up. Yes, everyone else seems to be highly emotional right now. But this is still what I see, and nothing has invalidated that. Again, we're getting into that part of the cycle like I touched on Saturday. Interest rates will be decreasing. What does that mean? We had a conversation. What does it factually mean if the Federal Reserve is going to begin decreasing interest rates? And I believe interest rates are going to be at 2 to 2.5% a year from now, okay? If not sooner than a year from now, okay? So if that's the case, what does that mean about the M2 money supply? And based on the M2 money supply, what does that imply about Bitcoin and the rest of the market? Guys, I've spent too much fucking time studying this stuff. I am not going to be derailed by the emotions of the market. I know how difficult it is to make money in this market. I have made a lot of money, and I've lost a lot of money, and I've learned from it. And I know how difficult this market can be. And I'm not fucking going anywhere. Just like I said on my post this morning, I'm not fucking going anywhere. So I just remain completely, I just couldn't be more convicted on this. And I never offer you financial advice on this channel. It's your responsibility as a grown adult to make your own financial decisions. But God damn it, you spend enough time doing research in this market, and you get to this point that feels similar to times past where it's testing you emotionally, but you're looking at things and saying, everything's telling me that we should be going up in 2025. And I just don't want to see anyone make I don't want to see people make horrific mistakes based on some volatility that we will likely see in September. So we have to stay vigilant. We have to stay on top of the charts. We have to keep an eye on the concerning views I've shared with you. They are concerning views. We'll have to see how they develop in the weeks to come. We got 4 weeks here. Let's see how September shakes out here. All right. There's no reason Bitcoin has to go to $44,000. Could it go to $44,000? It's possible. Of course it's possible. But there's no reason it has to. I think I've rambled enough, guys. I'm going to be back here. Today's Tuesday. Normally today is a TA Q&A day. But I've been rambling forever. So based on how the market looks tomorrow, maybe what I can do is kind of switch gears. I'll take some questions tomorrow. We also had an abbreviated week this week because we had Labor Day yesterday and I wasn't on the live stream. So, but I'll be back here tomorrow. I will be back here on Thursday. And, you know, depending how price action is, if it makes sense, maybe I'll be here on Sunday for the 2-week and weekly close to kind of see how things are looking. So, guys, thanks so much for tuning in. It's going to shake off like me after drinking a gallon of water. Thank you for your honest and optimistic views of the scary at this time crypto market. Always appreciate your time. Absolutely, guys. And believe me, if I did not feel optimistic and I was not feeling positive, before I sign off and before you leave, let me share this with you. I don't know if you've noticed this, something else about the content I put out there. But if you go to my YouTube channel and you listen to the way that I talked about a project, I'm going to use Casper. I'm going to keep going back to this project. I was saying bullish things about it when there was a reason to be bullish about it. When the chart became invalidated for me, you saw that I was authentic and honest with you, right? Now, I say that to say, if something fundamentally broke down in this chart, which changed my view, I would tell you, okay? What I'm sharing with you is my honest assessment of this market. And again, I will never claim to be an expert, but I've been here for several years. I've been a technician since 2016. I've been in the market, invested since 18, but in the market since 17. All right, so just at the end of the day, do your own due diligence, but I hope you take into account what I've shared with you today. Again, anticipating some potential volatility here in September, but really waiting for that fourth quarter. To me, everything is still lining up that we're going to get a very bullish fourth quarter going into 25. All right, guys, hang in there, and until next time, let's all spread awareness and let's carry the education forward. I'll see you right back here tomorrow around the same time. Take care.